In the last 30 years, gold has returned an average annual rate of 5.2%, which means if you bought and held gold for 14 years, you would have approximately doubled your money. Compare this to the average annual inflation rate of the US at 3.1%. Gold has been hailed as the hedge against inflation, and it has always reliably appreciated your investment faster than the rate that money depreciates. Considering the average annual interest rate of only 0.13% for US savings accounts, is gold a good investment right now? In March of 2022, the gold market climbed above the $2,000 per ounce level for the first time since August of 2020, mainly due to the geopolitical instability caused by the Russian-Ukrainian war. During times of turmoil, investors flock to precious metals such as gold because their value is universal. Unlike companies that may suddenly go bankrupt from excessive debt or management issues, humans have decided that gold will retain its value because it will always physically exist. It is a tangible commodity. Historically, we have seen gold prices surge during periods of distress due to the decrease in consumer and investor sentiment, such as the 6% price spike immediately after the 9/11 terror attacks. However, as of August 2022, gold now prices at around $1,750 an ounce as central banks such as the US Federal Reserve, European Central Bank, and Bank of England have started aggressively raising interest rates while increasing returns from interest-bearing assets. The aim of these policies is to attract both domestic and foreign investment who are looking to capitalize on these high rates to receive increased interest payments. As a result, the demand for the US dollar goes up and its value increases. However, this also reduces the appeal of gold, as unlike loans and bonds, investors of gold do not receive interest payments but rather through price appreciation. These new policies seriously hamper the gold market as investors seem to prioritize these high interest rates over, a piece of metal. It is unsurprising that the value of gold has decreased by over 14% since March of 2022. Compared to fiat currencies such as the US dollar, gold is considered to be a hedge against inflation, as it retains its value while the buying power of fiat currencies decreases. US inflation hit a 40-year high of 9.1% near the end of June 2022, which meant that the value of the money you own has dropped by nearly a tenth. In other words, a $100 bill will only have the relative buying power of $91.65. Meanwhile, the value of gold only decreased by a minuscule 1.57%. With the current fall in global equity and bond market prices, gold's attractiveness continues to increase as high inflation rips throughout the economy. Gold is a viable option for investors looking for a less risky option than bond markets where companies may default on their loans. Inflows into gold exchange trade funds totaled 269 tons in Q1 of 2022, equivalent to $17 billion, the highest total since Q3 of 2020. First quarter US gold coin mint sales also reached their highest level since 1999. However, the price of gold retreated in Q2, falling below $1,900 and has struggled to consolidate. The appeal of the US dollar has constrained the gold market, with the US dollar index climbing to a 20-year high in May. The Fed also raised its benchmark interest rate by 0.75 percentage points for the second consecutive time on July 27th from 2.25% to 2.5%, the highest since the start of the pandemic. So, putting the news aside, is investing in gold right now a wise decision? Yes. Even though gold has suffered through the increased pressure from interest rate hikes, indexes such as the Consumer Confidence Index and the Treasury yield curve have signaled a strong presence of a recession in 2022. We can see the customer confidence is extremely low right now, even dipping below the levels of the 2008 financial crisis and the 2022 COVID lockdowns. In addition, the Treasury yield curve is on the brink of another reversal, indicating the likelihood of a continued recession. The US also experienced negative GDP growth for the second consecutive quarter. As investor sentiment collapses, people are looking for safer options to invest their money that offers high returns than traditional banks but is less volatile than stocks and crypto markets. Gold has historically been resistant against recessions, as illustrated by the annual 15% price drop during the 2008 market crash compared to the annual 48% drop of the S&P 500. With a recession looming over us, gold has become a safe option to conserve the value of your money without exposing yourself to extreme volatility of a potential market crash. Adding to the huge volume of gold ETF traded as of Q1 of 2022 and high inflation rates, gold remains a strong investment for individuals looking to safely cross these chaotic times. The current dip of the gold price at only $1,760 per ounce signals a great opportunity to purchase gold at a low price and wait for potentially even greater returns as the market eventually rebounds. Want passive dividend income? Check out our predictions for one of the best dividend stocks to hold in 2022.